OpenAI just filed confidentially for what could be the largest tech IPO in history, a $1 trillion listing. Plus 4 more stories repricing the entire AI market today. Let's get into it. OpenAI is preparing to confidentially file a draft S-1 with the SEC as soon as this week, working with Goldman Sachs and Morgan Stanley toward a listing as early as September, at a targeted valuation above $1 trillion. That's up from roughly $850 billion in its last private round, against about $25 billion in annualized revenue. This is the moment AI shifts from a venture capital story to a public equity one, and it will reprice every private lab behind it. The bear case is stark. A $1 trillion valuation on $25 billion in revenue is a 40 times multiple, and OpenAI has not disclosed any path to profitability, a glaring contrast to Anthropic, which we'll get to. The forward signal: watch the S-1 itself. If it shows an operating profit timeline, the trillion holds. If it's pure growth at any cost, expect the skeptics to swarm. NVIDIA posted a record quarterly profit of $58.3 billion on $81.6 billion in revenue, up 85% year over year, crushing the roughly $43 billion net income estimate. It then guided current quarter revenue to about $91 billion, well above consensus, added an $80 billion buyback, and raised the dividend. Data center revenue surged 92% to $75.2 billion. Jensen Huang declared agentic AI has arrived, and yet the stock slipped about 1% because expectations had run ahead of even these numbers. That's the bear case in a single tick. When a blowout can't move the stock, the trade is priced for perfection. The forward signal connects directly to the compute story. Those OpenAI and Anthropic multi-year commitments are exactly the demand this print validates. If hyperscaler CapEx guidance holds near $700 billion, NVIDIA's run continues. Any crack there, and the durability debate reopens. Anthropic disclosed it expects its first-ever quarterly operating profit, guiding to $10.9 billion in second quarter revenue, a 130% jump from $4.8 billion in the first quarter, all while still training frontier models. This is the counterpoint to OpenAI's filing. Reaching profitability mid-flight directly challenges the assumption that frontier labs must burn cash indefinitely, and it hands Anthropic a cleaner IPO narrative than its larger rival. The bear case: 130% sequential growth is not a repeatable cadence, and the cost side is about to get heavier, which leads straight to its compute bill. The forward signal: watch whether profitability survives contact with that spending. If Anthropic stays in the black through its next training cycle, it becomes the template every lab is measured against, including OpenAI when its numbers finally go public. Anthropic has agreed to pay SpaceX roughly $1.25 billion per month for compute access through May 20, about $45 billion across the term. The deal underscores that compute capacity, not talent or models, is now the binding constraint for frontier labs, and it marks SpaceX's arrival as a serious AI infrastructure counterparty alongside the traditional cloud giants. The bear case is the flip side of that profit milestone we just covered. A $45 billion fixed commitment is a heavy anchor on a company that only just turned operationally profitable, and fixed costs don't flex when revenue growth slows. The forward signal: watch Microsoft. After its $5 billion investment, Microsoft is in talks to supply custom Maya chips to Anthropic. If that lands, Anthropic gains a silicon hedge that reduces both its NVIDIA dependence and its exposure to deals exactly like this one. Google released the Gemini 3.5 family, led by 3.5 Flash, which it says outperforms last generation's 3.1 Pro on hard coding and agentic benchmarks, with 3.5 Pro arriving next month. Alongside it came Spark, a general-purpose agent that reasons across a user's connected apps, and Omni, a world model for simulating physical environments aimed at robotics and gaming. This is Google's clearest attempt yet to match OpenAI and Anthropic on both raw intelligence and agentic action, the two battlegrounds that matter as those rivals march toward public markets. The bear case. Google is still framing this as a fast follower release, beating its own prior generation rather than the current frontier, and its real moat remains distribution, not benchmark leadership. The forward signal. The 3.5 Pro rollout next month is the read. If Pro tops the leaderboard, Google is back in the frontier race. If it merely matches, the gap holds. The through line today is unmistakable. AI is going public and turning profitable, and compute is the choke point deciding who wins. OpenAI's filing, NVIDIA's blowout, and Anthropic's first profit all point the same direction. If this helped sharpen your edge, subscribe. This has been the Daily Alpha.